Bando, Patrick, TGIF Warriors, ready for the NFP? Are all my action junkie buddies ready for some action? How you doing? So let me ask you something. I started 2 minutes late. I got a tweet from Steve. He started getting worried. Anyone else? Oh, thank you, Ziggy. Didn't even notice? You just ruined my whole rap. Were you, Dave? Okay, well, can you imagine your trading life without face? Okay. Who's addicted to face? Give me a why. I know I am. Yeah. I even miss it on the weekends. So this is follow through Friday. So we're looking at the end of the year. Here's a look on the Euro Yen by Grega. You know, still going to end up taking out these highs. Maybe it did it here already. Okay. So my point being on follow through Friday, to follow through and subscribe today. Okay. And don't do it for us. Do it for you. We'll get to the pairs. Okay. You'll be around, Derek? Okay. No college football tomorrow anyway. So, okay. So I heard that the only way our souls advance is by being charitable and giving. And if you can't be charitable and giving to yourself, how can you do that with others? And in fact, sometimes we do it with others and we don't even treat ourselves and be kind to ourselves. Now, everyone in here wants to make money trading. So the webinar is great. I think it's one of the best on the net, and it's free. But if you really want to be good to yourself, generous, and the generosity that I heard, it's not how much you've given. You know, a lot of people, well, I donated $1 million to cancer. Okay, I support my church. You know, I take care of, I work, I go to a food pantry, and you could do it with time too, right? But it's not how much you've spent, even if you donated $10 million. If you really want to know how charitable you are, think about what you hold on to and what you hold back. Okay? Don't hold back on setting yourself up for a great year in 2016. Look, there's just so many great ideas here, and you're only getting one little sliver of it in face. And I'm not saying that you can't do well just being in face, right? So be good to yourself, invest in your trading performance future. And of course, there's no guarantees, but the team's hit rate is near 60%. R to R's are always around 3 to 1 or better. So basically, you're making money if you take every pattern in play and you execute it correctly. Everyone with me? That's the end of my pitch. And really, it isn't. Oh, thank you, Madras. So we learned a little bit about being generous, and you can't advance. Your soul will not advance without being giving. So at least learn to give to yourself. And I'm talking to me too. Okay? All right, so let's get prepped for NFP. I want to start here. So during the week, I said I was looking for a 3 driver to the bottom in Euro Pound, which manifested, okay? And I know everyone is bearish Euro Pound, including the team, which, always gives me pause, but I want to point out a couple things. First of all, we did diverge at this low. This low was a throwover, similar technical pattern that Blake was pointing out yesterday with the S&Ps, the throwover line. So, If you bought it against the line, you got long at 33, right? But here's the important aspect of it to pay attention to. And the whole thing could unravel on the NFP, but there are some lessons here. So on the daily, they took out the stops here, right? New lows. They took out the stops here. Okay, I think this was a lower low than this low. It was. So all the longs are gone. Guys that are treating this as a rectangle are now short if they went with intraday action and did not wait for the close. I would say Steve Volge, Mr. Confirmation, is not short euro pound because he knows a candle isn't a candle until it closes. So what I'm saying is the setup in the market is all the longs are gone, new shorts may have entered, and it's above these lows. So potential stop hunt in euro pound. That's my, if you like to hear the ice crack, that's the trade. So we've cleaned out all the longs. We have a potential reversal day. Of course, you know, the NFP is here. And then just something else, if it doesn't happen today, you know, I know, you know, everyone's looking for risks to come off. I have for about, I don't know, a decade. But I was looking at Aussie yen here, and I like its look. Oh, one other thing on EG, something else. So there was just one other confluence point on it. Check this out. The low is near 61.8 back of this whole advance. So these two lows were in between the 50 fib, 61.8, and now we're 61.8. So if you didn't have a bearish bias because of a rectangle, you might say, hey, you know what? Might be a great break to buy. So you don't have to agree with me on this, but you guys see, you know, Blake talks about people being wrong-footed and the way people are positioned. I think all the longs are gone, new shorts are in, and it's above the breakdown. And it tags 61.8. And it's very contrarian. And then, so I wanted to show that fib. But the Aussie yen, I'm starting to really like the action here, the weekly. I didn't do the fibs on this. But, you know, you put the two together of Aussie being at major support around that 75 level that Steve talked about and decent action in the yen. I wouldn't chase it here, up here. But if the market generates some type of pullback, say towards 84.90, some type of fib retracement here, I would go with it. I would go with it without a lot of leverage, and you won't have a huge risk. You just risk maybe the 84 level on it. So if you pick it up at 90, 80, you reduce leverage and risk 80 pips, because I think there is potential on this for at least an ABC, and this may end up being a two driver, and we could end up challenging these highs eventually, but at least a retrace of this. So 87, 87 and a half. So that's something I'd have on my radar screen if we get a pullback in Aussie yen after the number or into next week. I'd look for a fib retrace there. So that's all I have. That's all I have market-wise. And I'm going to pass it over to Steve.
Okay, so you're throwing the whole potato here.
You got the hot potato, buddy. Well, what do you think about what would I say? That insight or that view of being generous is not what you give, it's what you hold back. What do you think? It's pretty deep, isn't it?
Pretty deep indeed.
Yeah, but it's true. You know, I mean, you know, there are millionaires that and billionaires that, you know, they're very philanthropic, but, you know, it's the poor lady in the Bible with the copper coin who gave all she had. Are you crying? Not until after the NFP. All right, buddy. So, Father Dale is through with his homily today. But really, I think people should, be kind to themselves and invest in their trading performance future and have access to the whole team every day. Stop playing around and get serious, Money comes and goes. Time is gone forever. Make it count. And, now is all we have. So get prepped for 2018. That's my message.
Indeed, because to be honest, the year is almost over.
Right.
And, we've seen very often, as it happened with the dollar, as it happened with the Euro USD, that, a new year will also inevitably bring some new trends. Of course, not for every currency pair we follow or for every financial instrument we follow. But, the beginning of a new year is a good opportunity to see, how the new trends and how the big heads position themselves, and that can create shifts, sometimes tectonic shifts in the market.
Is that kind of like that expression, as January goes, so goes the rest of the year? I know that you pointed that out over the last 8 months.
It's likely to happen. It's more likely to happen than if it was just one out of the 12 months of a year. So it's not that January would necessarily bring something new to the table, but instead of having, 1/12 chances of bringing in, a new trend, it has more than that, statistically speaking. So it's good for people to pay attention when usually if you see some major low or some major high at the very few first days of a year, you should probably pay more attention than you would do if it was at any other month or period of the year. That's all we say about it.
Okay.
Now, having to do with, by the way, we already have a decent amount of questions. First of all, I want to thank, we have a lot of people saying some very good words about us, and thank you very much. I'm not going to mention specifically, we don't want to blow our own horn. But we already but we already have questions, and the vast majority of them actually, one way or another, involve the pound. So I'm going to go over some of the pound crosses because people are already asking for them, and we also have a question for the Kiwi. Okay, so let's visit the Kiwi, and then let's visit anything and everything that has to do with the pound. Okay, first of all, the Kiwi.
We're visiting the Kiwi now. I'm imagining I'm on an airplane.
Yeah, that would be lovely, wouldn't it?
I'll leave you alone now, bro. Go ahead.
Okay, so the Kiwi is barely hanging on, this triangular support, and it's more than obvious that if the NFP print we are expecting to have in 15 minutes from now is going to beat expectations, or anyhow the data are going to be taking us positive from the market. I remind you that there is an expectation for 200,000 new jobs, and if we beat that, or if the unemployment rate drops anymore, or whatever else data the market deems positive, and we see some dollar strength, I think that Kiwi is obviously going to break below the triangle, and most likely than not, that's going to lead to another leg lower towards the 66 area, which we find the 127% extension of this move higher. So the Kiwi is already at a very dangerous point here. The Aussie has already broken below the respective triangle, but is currently testing a confluence of three support levels, and this is a major area. I mean, I have been expecting a retest of 75 for some time now, because here we find the 78.6 of this move higher, we find this ascending trend line support, And we also see that this is a horizontal area that has multiple times acted as support resistance. So, Aussie is well positioned for a rebound if we get dollar weakness, but if we get dollar strength, it should also break below this area, and that's bad news because then it opens the door for a move lower, at least a couple of hundred pips towards the 73.28 zone and that low there, which means that both the Aussie and the Kiwi are hanging by a thread at the moment, and any dollar strength should make them extend lower. On the other hand, if we get dollar weakness, they're both sitting on support. So, what happens from there? I mean, we might see some big rebound. Personally, I have no reason to be looking higher until proven otherwise. So, I maintain a bearish bias, and usually when you have a strong move, you'll be more times on the right side if you maintain a bias in the direction of the trend than the opposite. Now, having to do with the cable, as far as I'm concerned, what I'm seeing here in the cable, for the time being, looks like a bull flag. So I know that the past few days have been choppy and we've been rather drifting lower, but as long as we are holding above 133, and as long as this doesn't take too long, I have no reason not to see this as the pole and this as a bull flag. So again, until proven otherwise, I would expect sooner or later another move higher for the cable. And the same applies more or less in the euro. I know that it started looking worse, but still, there is no real confirmation that we have topped or whatever else. As we've said plenty of times, you cannot know in advance how a corrective move is going to unfold. You start speculating because you have too little price action, but the more price action you get a better idea of what kind of a correction you have. So we will see what it is, but for the time being, I have no reason to view that differently than just a correction. Now, let me have a look at Euros and Euro Kiwi because we have questions about them, and then we'll go for everything that has to do with the pound crosses. Okay. The euro could extend lower from here after we broke below this ascending wedge, and if we fail without making a new high, we can easily extend a little bit lower towards this high at 153.50 or even lower towards 152. But as long as we remain above 152, you have absolutely no reason to believe that the trend has changed and is anything else but bullish. So a little bit hard to be long at current levels, but if you're looking in the medium term, any weakness that shows some kind of a bottoming formation should be used as a buying opportunity. Euro Kiwi, more or less the same. The Euro Kiwi has been holding a very important support area, the first support area actually we have, but on the other hand, it has been rejected from the ascending channel resistance once again. So here as well, there is a potential of a move lower, one more move lower before going higher once again. So, we are at major support at the moment, breaking below, closing below, let's say 171.20, should extend the pair lower, but still that doesn't mean that it's going to be anything more than a short-term move, a short-term corrective move, because nothing moves in a straight line. As you see, this is a very well-defined uptrend, but we have had several corrective moves. You can see them here, this one, that one, this one, and we can get one more of these without affecting at all the medium-term uptrend. So once again, I would be careful being long up here, but I would definitely not want to be short for a long period of time. I'd rather wait for a bigger correction and hope for a bigger correction and be long, bottom line. Now, having to do with the euro pound. Okay, there are two possible interpretations here. One is a channel, in which case we retested it today. The other one is a triangle, in which case we broke below it. Obviously, today's candle so far is quite bullish because we pushed to new lows, and it has turned to a hammer, and on a daily closing basis, we might end up holding this horizontal area of support. So, before turning really bearish, I would be monitoring, first of all, how we close today, and second of all, this parallel trend line to that one, because that might not be a triangle, but a descending channel. So, don't jump the gun. What I'm trying to say here is, and, we still don't have like 100% confirmation. I would like to see it extend lower, though. I mean, my bias still remains that most likely than not, we have one more leg lower, as I was saying yesterday as well. So, I'm looking lower, but, I don't have absolute confirmation yet. Now, we talked about the cable. Let's visit the pound Aussie and the pound Kiwi, since a lot of friends are asking for them. Okay, pound Aussie, another push to new highs. Today we are getting another really nice rejection, but we saw that last week as well, and it lasted only for 3-4 days. Obviously, at some point we're going to get a deeper correction, but as you see, trying to time reversals in a trend is not an easy game to do, and that's why you always need to have a very well-defined reward to risk ratio, and you really need to be expecting to be aiming for multiple times your risk, because trying to catch reversals is a game that even a good player will on average succeed in like 25, 30, 35% of the occasions. So unless you're looking for at least a 3-to-1 reward to risk ratio, on the long run, trying to catch reversals is probably going to hurt your trading account. Anyhow, today's candle shows again some potential of a reversal. If that manifests, and that's a big if so far, but let's say it does, I would be looking to find support perhaps in this area or in this area. You see multiple support areas. So this also should probably coincide, depends on how fast it unfolds, with the ascending triangle, with the ascending channels support. So you can see that, you just see which areas and which levels in the market have importance, and always in an uptrend, any correction, you'd rather be looking to buy, some good support if you see a reaction than trying to do the opposite. And as far as we're concerned, this is not only a medium-term uptrend, which is well-defined, but it's also a major break out of this triangle. And the same thing applies if we look at the big picture for the pound Kiwi. I want to remind you, we had been saying that for a long period of time, that the pound Kiwi has broken out of this bottoming, this long-term bottoming pattern. You can see it, enclosed within these two blue trend lines. So, neither of these pairs should be taking as bearish, but rather the opposite. I mean, we should maintain a bullish bias until really market proving us wrong. Okay, let's see what other questions we have.
Steve.
Yes, Dale.
Steve. Hi. If I may add one thing, I don't know how much you talked about sterling this morning, because I missed the first 10 minutes of the webinar.
We did see sterling, but yeah, I'll let you explain the macro stuff. I know that we had a deal between Juncker and May, right?
Yeah, basically a deal has been reached, and the next step is now trade negotiations and everything. So we're basically progressing.
Yeah, it's a positive step. There's no question about it.
Yeah, positive step. But I mean, people in the chat room will know, and I think I tweeted it as well. I closed out my last two, not big ones, very small actually positions, long sterling versus Kiwi and euro. And the rationale is this: I'm still bullish the pound for sure, but as I've always explained, I'm trying to pick good entry and exit points. And I think that after this development, where it's obvious that it's a good step for the UK, the fact that things are continuing forward. Now, this is politics, so there's going to be seesawing from either side. So my view is, and my experience tells me, that the next headlines we're going to see, the next event is going to be something on the euro side, on the EU side, where they're going to be difficult about something else. and it's just going to keep coming and going all the time, because, you know, remember, the UK and the Europeans, they want to please their own people, and they want to show that they're getting the best deal possible. Both sides want to do that.
Of course, politicians.
Exactly. So there's going to be toing and froing, and we've had some really good constructive work here. So that's looking good for the pound. So I think that the next step is we're going to have a small down leg. You know, you're looking at sterling Kiwi. I was talking about this morning. It was what was it? Hold on a second. Yeah, it was like 197.5, and I was saying, you know, I think it's going to probably go down to like 194s before we see
might be the case. It's a nice support area here down at 194, and it can even go lower, but it will still remain bullish. I mean, from a technical perspective. Yes,
exactly. So I personally think that we're going to see a little bit of a dip. It's actually already happening. You went through Euro Sterling and Sterling Kiwi, which will probably continue a bit, and there's going to be a bit toing and froing, but my personal bias for the pound is still bullish. End of story. That's my opinion, you know, and I keep playing these pairs on the bullish side for sterling. I just try to pick entry and exit points which are good, and for that I look at your analysis usually, Steve. Anyway, that's my 2 cents.
Okay. By the way, we have NFPs coming in 1.5 minutes, I think. Let me go through some questions, and obviously I don't need to mention that. The first indication for NFPs is going to be seeing what the USD yen is going to be doing. So I'm going to open the USD yen here on the bottom right. Okay, which is already moving on the highs. Obviously, what we saw here was like a bull flag. So we're seeing one more leg higher. And once again, key level for the USD yen, if we get up there, is going to be this blue trend line resistance. You can see how important it is. So, don't get overly happy with USD yen strength, because this trend line has proven multiple times how important it is. It's currently passing from around 114.20. So as long as we remain below there, I think that positioning long is a little bit dangerous. Let's see. No, we don't have data yet, right? 1 minute, yes. So, Stelio, we're expecting 200,000 for payrolls, right? And 4.1 unemployment.
Yes, 200,000, 4.1. We look at the participation rate as well, see how that's going.
Yes, of course. Although unfortunately the market has proved that it doesn't really care about participation rate. I mean, I've never seen like a serious response to the participation rate, unfortunately, because it's an important, let's see.
It's good numbers.
228, it's a bit. 228 versus 200, unemployment rate unchanged.
The only thing is that all revisions are lower, all of them, and also average hourly earnings is lower than expected. So strong, but not mega strong, I think.
Yes, and let's see. I don't see so far any major reaction here. Actually, the USD yen for the time being is a little bit weakening. Let's have a look at the pound and the cable. I'm going to leave all charts open so we can be monitoring it at the same time. Not really much to write home about yet, but we need to let the market digest a little bit more. The euro is strengthening somewhat, just a bit as well. Risk is, on the highs. Aussie is rebounding from the area we said. Let's have a look at the Kiwi as well. I think it's also rebounding from there. Yes, it's rebounding, but still no major moves. And I think we should leave a little bit more time for the market to digest, because actually, we got a small bit according to what was expected, but it's nothing to really to write home about. I mean, 200, 228, it's not a big divergence. Somebody will say, that's 15% of a bit, but we've seen very often that these prints are being revised afterwards, lower, higher. I mean, the first print is just a simple indication and doesn't say much, and unless you see like some big bit or some big Canada Q3 capacity utilization 85 versus 84.3. Okay, that's slightly positive data. Let's have a look at the loonie. Okay, the loonie is more or less flat for the day. It's a little bit lower, but still nothing to write home about. We remain in this range actually, which is between 129 and 126.50. So unless or until we see a resolution of this range, I don't think there is much to do. I would like to see it break to the upside to perhaps even go all the way and retest the 61.8, and I would like to be short, but it's it's not something you can bet on. USD NOK is more or less flat on the day as well. Let's have a look of what the treasuries are doing at the moment. The treasuries are lower on the day, but still nothing much. They're actually paring back some of the earlier losses. I mean, in a while we're going to be flat on the day. After breaking through this triangle in the treasuries, I was really expecting for an acceleration lower, and still there is a possibility because this broken triangle support has acted as a resistance, in multiple occasions so far. But we need to see a move extend lower, and that should happen soon. Otherwise, we're then looking at possibly another kind of pattern. I mean, perhaps then we're looking of some, for example, a flat bottom triangle, something like that. That's also a possible interpretation. So I really want to see a move below there to believe that the downside has the expected potential. Blake, are you with us, by the way? Blake is going to be with us at some point. Okay, let me see what questions we have until we. The market response is still muted, so there's not much to say here. I mean, whatever we were seeing before, more or less. Jason, okay, Jason is asking. Okay, I can see from your last name that you're Greek. You have my son's name as well. Am I in Greece? Yes, I am in Athens. In what company? ForexAnalytix and the private fund. I can't name it because it's a private fund. Shanghai Composite China market is on the watch. It's moving lower. The trading view code is. Let's have a look at it. Yeah. Hey, Blaker. I can hear you.
That was me, Steve.
Oh, sorry. I don't see much here. I mean, does this look like a bearish move? No, I wouldn't say so. I wouldn't say so. Not yet. Not yet. We really need to break below this area. Otherwise, this might extend higher. And the likeliest scenario is that since we're looking at a move that is ongoing since the very beginning of 2016, a move higher. It's slow though. I mean, in comparison to other bull markets, it's obviously lagging by a lot. So overall, I wouldn't be in the long term very bullish the specific index, but in the medium term, there you go. In the medium term, I see no reason why we wouldn't extend to this channel resistance. Let's mark it otherwise so it's easily. Okay, so otherwise, I don't see any reason why we shouldn't first extend to the blue channel resistance in Shanghai. Okay, in case this breaks lower, I would be looking for this as support. So we're currently in the middle of an ascending channel in a consolidation formation. So first of all, the chances are higher that it's going to break higher since it's a consolidation after a move higher. Second of all, even if it breaks lower, what's the channel for resistance, and we will need to break below the channel to actually turn bearish. So in my opinion, there's not really much to be doing here. we are in the middle of a megaphone formation in the middle of an ascending channel. So not something I would really position myself for. So just giving you my point of view. Okay, that's a solid question. Let's go have a look at the DXY. Yeah, the euro now. Okay, now we're seeing, first of all, now we're seeing some US dollar strength coming through the market, which makes sense. I mean, the data was positive, and we had already been seeing a rebound from here. So as we see, the dollar broke out of this descending channel, and it's extending higher. Now, would I turn bullish at the moment? No, I wouldn't. Why? Because I would want to see what's going to happen with the 94.20 level, which we're almost there, because this has acted multiple times as support and resistance. It acted as a resistance here, 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 there. It might act once again as a resistance. Okay, so let's see what happens at the 94.20 level. If we actually manage to close above it, and from that point on we hold it, then yes, you can be looking higher. But if we get rejected from there, from here, so if we open the new week and we see some dollar weakness, then be very careful, right? Because I remind you that, once again, as we've said many times, we have no idea what kind of a formation this is. I mean, the formation we're seeing since the dollar bottomed at the first days of September, but we know one thing for sure, is that the dollar was moving higher since the very beginning of the year, and the move we're seeing higher at the moment really doesn't have any impulsive characteristics so far, which means that you need to be very cautious being long the dollar, because it should have more downside left, but that doesn't mean that's going to happen from exactly here. So 94.20 is, you know, an immediate level of interest. It has a high chance of acting as a resistance. So in my opinion, be careful with being long the dollar unless or until we break above it. Okay. Commodities. Let's have a look at them. Ronit has a chart to share. Let me see. Okay. Let me show it. Let me see what you're seeing in the Shanghai Stock Exchange. Yeah, so we're seeing the same channel, but you're also viewing this as a triangle. Listen, the reason I don't like this trend line is because it's almost completely arbitrary. I mean, you took a point from here and a point from there, and you know, these are only 2 points of contact. So what I'm trying to say is that we have no confirmation that this line has any importance to the market, because we could have easily also said that, okay, we're going to use that high over there. Let me show you what I'm seeing, what I'm showing. We could have easily also said, okay, we're taking that high and that, or that high and that. I mean, you know, you can draw any line you want from there, but until we retest it once again and this trend line proves to have some importance to the market, I wouldn't be paying so much attention to it. So as far as I'm concerned, the only 2 lines that matter at the moment are the channel lines, these ones. Okay.
By the way, Steve.
Yes, hello.
One more thing we need to. Hi. Is that Blake?
Hey, Blake.
It is. I just wanted to say good morning. But go ahead, Stelios.
One more thing I think we have to mention going into the weekend is the introduction of the Bitcoin future on Sunday.
On Sunday, yes.
Your favorite subject, Steve, but just something that might bring more volatility to an already deadly volatile Bitcoin.
Hey,
yes, it's nuts. I mean,
yeah, and are you looking at it? Have you looked at Bitcoin this morning? I mean, are you just looking at the charts?
Whatever it did yesterday, it almost erased at some point in the day. I mean, this kind of market volatility is just insane. I mean,
personally, what scares me is what Nick tweeted. I don't know if you saw that. She tweeted when things were going south, and she said, something along the lines of Bitcoin is down $1,500 or something like that, and next support is X. If your exchange is not down at the moment, and this is the kind of stuff that scares me. It scares the hell out of me.
But yeah, that's exactly what we were discussing yesterday. Once again, Stelio, that when things go sour with Bitcoin, people won't be able to exit the positions. And can you imagine what kind of panic that's going to create? Every time that Bitcoin moves strongly lower, many of the exchanges just shut down and etc. etc. Just imagine being trapped in a position and needing a lot of time to exit it, and perhaps even your exchange is down. Personally, I have no idea why would somebody want to get involved with that, but that's just me.
Yeah, I agree with you 100%.
So
we actually had a discussion with Trent about it yesterday late at night, and he was telling me, he was telling me, I find it very awkward that you see so different prices in different exchanges, and there aren't people doing arbitrage. And what I told him, and he said, you're absolutely right, actually, is the following. I told him that in order for you to be executing some arbitrage tactics, you need to know that you will be able to enter both positions and exit both positions at the same time and promptly, right?
Yeah, trying our bucket shops. Give it a shot.
Exactly. But in this case, you know that this is impossible. And that's why we see so big divergences between exchanges, because actually, if you try to arbitrage, there is a good chance that you're going to left holding the bag with keeping only one of your positions. Blake, what are you seeing after the NFPs, mate?
Inverted head and shoulder pattern on the Kiwi hourly. I'm updating ForexAnalytix right now. Gold just touched highs. We might have a little double bottom there. I think you got to keep an eye on gold. Also, copper just rallied. A lot of precious metals are getting a bid here. So watch the Aussie and the Kiwi. They're very oversold. Kiwi had a very
both
low
of them.
PSI.
Both of them. I showed that both of them are at a critical supports, and I said that if the market after the NFPs breaks them below there, then they should extend lower. But if we do see a rebound from here, it's a good point. I mean, they should rebound from here if they actually want to have a shot at it.
Hey, Blake, I was wondering what you thought on Euro Pound. Longs are out scratching their head that the market's 30 pips above their stop.
Yeah, it looks.
Shorts are underwater 30, 40 pips. So
yeah, it looks like a false breakdown if you ask me. But hey guys, I can't chat long. I just wanted to say that the dollar the dollar's been bought pretty aggressively this week. Looks like there's a little bit of profit taking. So be careful if you're long the dollar, especially if gold and silver get a bounce. Those are really oversold from this week as well.
Indeed, in the short term, they can bounce. And actually, oil is also bouncing. And as you see, that's why it's very important to keep formations on your charts. Just look where oil found the bottom. It found the bottom at the extension of the channel it was respecting for so long. So we penetrated through the channel, but the channel is still important in the market because we came down, we retested it, we rebounded. We came down, we retested it. Once again, we're rebounding. This is an important trend line for the market. Already once, twice, 3, 4 times. Okay. So as we had said several days ago, as long as oil is holding above the 55 area, there's absolutely no reason to be bearish. It actually rebounded even before reaching that. So, why not a push to new highs from here? Very likely. Be very careful if you're short oil. I really think that there is no technical reason to be short oil. Now, having to do with the metals, yes, we're seeing a rebound. I mean, we might see some little relief rallies, but honestly speaking, they look like shit. And I really believe that even if we see some short-term rebounds,
Language.
yeah, sorry, yeah. So I really believe that even if we see some rebounds, unless we break again the broken triangle supports, there is absolutely no reason to be bullish. So For gold, I think 1260 is now resistance. For silver, I think that 1630 is now resistance. Can even extend to 1670 and still be bearish, but I really believe that it's more likely that it won't even make it to that. So even if it rebounds, it might rebound just to 1630. And you know, I'll still keep looking lower until proven otherwise. Also on gold, November bottom, 2017, same November, December bottom. We need to see if it holds, says Ronit. Yes. Euro USD and USD yen thoughts, please. I already covered the USD yen before. Blake, I don't know, what do you think about the USD yen? We obviously had a rebound. But
Ronit's right about the dollar. Ronit never wavered from his bullish dollar stance. He said as long as 92
but we need to see, you know, we need to see.
Nice call, Ronit.
I was, you know, I got stopped out of my dollar yen short overnight, and I was hoping for a move to 113.95 to sell it. Just never got there.
This trend line once again, right, Blake?
Yeah,
you're looking at
trying
the
to play off of that. But I'm not dealing with that right now. I'm dealing with the Aussie and the Kiwi and you know, some euros and that type of thing.
Okay. So that's it having to do with the USD yen. So bottom line with the USD yen, as long as that long-term descending trend line holds, it currently passes from around 114, 114.20, depends on how you draw it. You know, be careful being on the long side, because this trend line has been capping price action for a long period of time, and you know, the market has already proven that it's viewing it as important, and probably the reward to risk ratio is not being long at current levels. If you were already long, sure, you can hold your position and see what happens, but I wouldn't be buying it up there. Now, having to do with the Euro USD, as I said earlier, we don't know exactly what kind of a formation this is, because we need more price action. But I can tell you one thing for sure: I need to see a lot more to believe that the Euro USD is bearish. So I think we're gonna have more upside.
Hey, Steve, there was a story on CNBC that FX trading has become so tame compared to cryptos that ARP is now endorsing FX trading for senior citizens. I know you're a young man, but you know, it's okay.
You know something. Definitely, the price action we see in cryptos is not something I would like to ever get involved with. I mean, this kind of roller coaster price action, I would rather go to the casino and play the roulette, which I would never do. I'd rather play blackjack or poker. But
if you're gray, it's okay to play. So go ahead. We have about 10 minutes before Akil Stokes. Blake, you know Akil, if you're still around?
I'm sorry, I do not. I'm sorry, I do not.
Okay, so a very popular guy.
By the way, guys, Steve mentioned poker. We have a Boxing Day poker match with Steve and some other friends. We might live stream that. What do you think?
At the 26th, yeah, that's true. We will be accepting live bets only payable in Bitcoin, please. Not. Okay, so let's see. We had a question about the USD Swiss. The USD Swiss actually was extremely well behaved. I mean, the downtrend was very nicely contained in this channel. We broke out above it, but we tagged the 78.6 to the pip today, and you know, it's turning hard for the day. So be very careful up here, because you know, a rejection from current levels is not going to be a good thing if you're long. And you know, given with my bias having to do with the Euro USD, I would really not be long at current levels. So perhaps this is a shorting opportunity. Let's see how the day closes, and we take it from there. Euro, yen, and Guppy. Okay, sure. Let's have a look at them. First of all, about the euro yen, without even looking it, I haven't even looked at today. Already, I can tell you one thing for sure. Why the hell would you want to be involved? Because we're currently in the 3rd month of being trapped in this tedious range, and we're more or less in the middle of it once again. So, you know, we've been here since the middle of September, and we are almost from, you know, we're actually 1 week away from completing 3 months trapped in here. So what can I tell you about the euro yen? You have 2 options, 3 options. 1, stop looking at it. 2, try to buy a test of the support or sell a test of the resistance. You know that at least you will have a very well-defined reward to risk ratio. 3, buy the break higher or sell the break lower. These are your options here. Now, trading it while we're in the middle of a 3-month range, I don't know. It seems to me the recipe for disaster. My 50 cents. Now, having to do with the Guppy.
Hey, Trader Tequila here, and I want to steal a few seconds of your day to inform you that
Is that your TV, Dale? Okay. Having to do with the Guppy. Today we had once again a rejection from the 153 area. Obviously, you know, we were viewing this possibly as a triangle, but you can also view this as well as a broad range. So if we delete this, and we delete this, and we do this, as you see, we also have a range here. It's a broad range, it's a big range, it's a 500 pip range from 148 roughly to 153. But unless we clear it to the upside, you know, there is not much to do here. Obviously, if you look at the long-term picture, breaking above the 148 level was, you know, a major break. So maintaining a bullish bias as long as we are above 148 is probably the way to go. But on the other hand, we're getting rejected from 153 once again. So, you know, this resistance area is hard to crack so far. So be careful. Obviously, if we crack it, we should extend higher somewhat, at least somewhat. I mean, the next area of resistance I have is up at 156.70. So I believe that if we manage to close above 153, we're extending at least to there. Okay, so that's my point of view on the Guppy as well. Aussie yen. Okay, Aussie yen is actually quite interesting because if the formation I'm monitoring proves to be valid, then it's quite bearish because you can see here within the blue trend lines that this was an ascending triangle. We broke below it, we came back to retest it, also horizontal resistance there. We got rejected, we moved lower, but on the other hand, we seem to be holding once again. This can easily prove to be like a bear flag. So as long as this trend line holds, even if we extend the rebound somewhat more, I will maintain a bearish bias. Okay, so until proven otherwise, I think it can extend lower towards 82. Let's have a look at the Kiwi yen as well, because this is interesting. It's currently once again at resistance actually. So very important area here because it's horizontal resistance also. As you see, we have this descending channel. So the Kiwi yen is at quite an important level at the moment. If we get rejected from there, perfect. It looks very nicely to extend lower. Now, if we break above here, things get more complicated because despite I will still be maintaining a bearish bias simply because we broke below this major trend line. That will mean though that we can extend higher towards 79 before moving lower again. Okay, so watch this area for a rejection, perhaps even today. If that fails to reject price action and we extend higher, then I would be looking for the 79 area to provide resistance. Okay. USD ZAR, sure. Actually, my mistake. I should have mentioned USD ZAR in the previous days because I'm actively paying attention to it, and this is the formation I'm looking for at the moment. Because as you see, USD ZAR has been technically very nice, very beautiful. It broke above the triangle. That was a bullish break. I traded a couple of times actually to the long side. I was lucky. It was successful, both of them. It came back, it retested the triangle, it extended higher. It then dropped, it found resistance at the target we had here and the horizontal resistance area. It moved lower and found support back again here. And I'm viewing this as a possible descending wedge. But for this to be confirmed, we really need to have a daily close above this zone, okay? So if we actually manage to penetrate this area, then I would be looking for a strong move higher once again. So I don't think that there is a trade at the moment in USD ZAR, but I see the potential of a trade soon. I would still like to trade it to the long side, I have to say, but I don't have confirmation yet. Let's have a look at the euro. Somebody's mentioning the euro is rebounding. Yeah, it has pared back most of its losses from earlier. Obviously, as you see, the USD is pulling back even on the yen. We've already pared back like more than half of today's gains. Let's have a look at the Aussie and the Kiwi once again. I know Blake is monitoring them actively. Okay, as I told you before, Aussie was sitting on a triple confluence of supports. It's rebounding for now. Of course, that doesn't make me bullish. Kiwi also rebounded from the triangle. I need a lot more to turn bullish, okay? A lot more from these pairs. But, that's a signal that at least for now they're holding. By the way, we had a question before about the Aussie Kiwi. As I said yesterday, nothing has changed here. Not really much to do here. I mean, I would probably be looking higher in the medium term, but do I think that the move lower is done and over? Probably not. So I think some more downside left before perhaps returning to being bullish. And current technical pattern not really clean, so I would just stay away from it. Blake, are you here, mate?
I'm listening in, but yes, I'm just trying to navigate through this Kiwi.
Any last few words before Dale's interview in 2 minutes?
No, I think that the dollar, like I said, is a little overbought, so it's pulling back here. I think if the euro breaks above 117.80, then we have a descending wedge that is breaking out to the upside that we'll probably see 118 maybe by the end of the day. I think that's possible. Our average hourly earnings is what's sinking the dollar. It's in a revision lower.
They were lower.
Yeah, it's not the headline number. It came in a little less than expected. Everybody's. And I said it a couple days ago, and I continue to say, one of my biggest fears, and I think a lot of the Fed governors are starting to mention it, is it's persistently low inflation, and what if inflation doesn't rear its ugly head and everybody's expecting a big tick up, and without average hourly earnings really moving higher at an expected rate, the chance of inflation really getting out of control or even ticking up much higher from where we're at is slim, and then it's hard to get inflation expectations to rise when wages aren't going up. So that's the
treasuries have already turned flat on the day, despite being lower earlier.
Yeah, and so you got to watch yields. I mean, yields have had a nice bounce over the last 2 days. Yields can come down, and again, that's going to weigh on the dollar. So I think that if you're long dollars, you have to be a little cautious right now, and dollar yen should find some support down at 113, but below that it could get a little messy.
Okay, thank you, Blake.
Thanks, guys.
Okay, Dale, you have an interview today, right, mate?
Yes, sir. Another great week.
I know I know you said it before, but I don't remember who do we have today?
Akil Stokes.
Okay, and what are you going to talk about?
Everything.
So cars, football, women, etc.
Everything. Stick around.
Okay.
Thank you, buddy. All right.
Perfect. Thank you very much. Have a wonderful week, everyone.
Yeah. Have a great week, everyone. Here's Akil. Akil, I'm making you the presenter. I'm passing you the ball. Looking forward to hearing your voice and seeing your screen. It's been a long time, buddy. Five, 4, 3, 2, 1. Waiting to hear you.
You hear my voice?
I hear you. See, right on cue. And
Perfect.
There's also a screen share option for you.
I have no idea
brother.
what screen is showing, so I'm going to click one. Oh, look at that. It kind of tells me. Perfect.
Yeah.
Perfect.
All right, man.
Cars, women, sports. I like that.
All right. Well, listen, Akil, it has to have been at least a few years or so since you and I have had a conversation.
Yeah.
How have you been, buddy? It's great to hear your voice again.
I've been good. I can't complain at all. I get to wake up every morning and do something that I'm very passionate about as far as trading and helping other traders as well. And, you know, I love the markets. I always feel like it's a puzzle that you'll never solve completely. We'll never quite get the answer. But we come back each and every day and we try as hard as we can to chase that carrot that's in front of our face. And then that's, you know, that's motivating to me.
Yeah, it's also great prevention against dementia because don't you think? I mean, you know, older people do these brain exercises. I don't think there's anything more strenuous than screening FX trades, managing risk, looking for formation signals, and you're very good at it, Akil. I did notice that you're on an exodus again. That maybe you could refresh my memory about the beginning of your journey. But just like many of us, looks like you've moved on. And I want to talk about what you're doing now. But maybe you could just give our viewers a little bit about your background and how you got started, and then we could talk some markets and your new venture.
Sure, no problem. And first and foremost, appreciate you guys coming here to listen to me talk. Obviously, you guys are here because of Dale, but it's still, it's still it's strange to actually have traders that are listening to you. In my mind, I feel I know I've been trading for what, 10 years now, but in my mind, I still feel like I'm a novice in the market because every day I'm just trying to learn something new.
Great attitude.
But I started off like everyone else. I didn't go to school for finance or anything like that. In fact, funny story, I switched my major in college because I was failing out of my economics classes. I couldn't get micro or macroeconomics, and switched majors because of that. And lo and behold, now I'm working in a field where that's what revolves around me. But I first got started in the stock market. I had graduated college right around the time the recession had started here in the US. So I was one of those lucky individuals that graduated, had an expensive piece of paper telling me that I did something good and couldn't get a job.
That's funny.
Yeah.
Because I did the same thing 30 years before you did.
See?
Came out of school with, that was the mid-'70s recession. Your recession was, the Great Recession. Do you know why they call it? Why did they call it great? Was it great for you? Anyway, it was deeper than the mid-'70s. So, yeah, that was a very tough time to come out of school and look for employment.
Yeah, it was difficult. I could not find anything, really anything in my field. I'm actually kind of blessed. I ended up working with children that had mental and behavioral health issues, so like Asperger's and autism.
Wow.
And very very beneficial time in my life just for understanding different people and different issues that are out there. But as I look back on it, I think that's where I got my patience from in trading. I'm a very patient trader. I typically I don't really get too emotional in the markets, and that's typically what kills a lot of traders when they get fear and greed and all those emotions. I typically don't have that because of my years dealing with these children. You have to stay kind of neutral. You can't get too high, you can't get too low. You have to be that steady face for them. So that has helped. But
yeah, go ahead.
I got into the stock market originally because my dad was like, my dad always taught me about investing, and we started off small, just like piggy bank to savings account to certificate of deposit to money market. And by the time I graduated college, I'm like, well, what's the next step? He said, well, investing is the next step. So, he says, I asked him, well, how do you invest? How do you do all this stuff? And I just buy something, So the first stock that I actually bought was Apple. And then this was well before the 2013 split? I forgot what it was, but bought Apple at about $99, first stock ever. Didn't know much about it, but I knew that they had a good reputation. They had this thing called the iPhone coming out, and I said, okay, well, that makes sense. And just bought it on common knowledge like that, and obviously did pretty well. Sold it way too soon. I don't want to admit what I sold it at, but I didn't know any better back then. So it was like, hey, I doubled my money. Let's get rid of it. And I just really started in the stock market that way, just doing stuff I knew. I tried to act like I was reading reports, and I had an office I rented out with 2 TVs and CNBC and Bloomberg and magazines, but most of that stuff was just for show. I was just doing what I thought your typical Wall Street person, your trader, was supposed to do. And obviously now I realize all that stuff isn't necessary. But I hooked up with a mentor. It was a local millionaire, actually, who made a lot of money in real estate, and I went under his wing to learn about the stock market. And when I say that, I basically, for the entire summer while I was unemployed, I just went to his office and shadowed him. Didn't ask for any money, didn't really ask for anything in return. I just sat there, I watched him, I asked questions, I listened to people he talked to, and just kind of wanted to soak in everything I could. And I had some pretty decent success in the stock market. However, I didn't have enough money to actively make money. I was making money, but it was longer term investments, and it wasn't enough to make it a full-time career.
And no leverage.
Yeah, exactly. No leverage. So, once I had a few positions on, I couldn't really do anything else unless I sold one and then opened up more money. And it was just like, these things were taking years to get their returns. That doesn't pay the bills.
I hear you.
So it was at that point where a friend of mine, one of my best friends, he told me about the Forex market. And, I'm a little shameful to admit this, but like everyone else, I was intrigued by the fact that it was highly leveraged and that I can make a lot of money with a little bit of money, and I can make a massive amount of money fairly quickly, because that's what the internet often tells you, right? Make $1 million in a year or so. So I got into the Forex market, started learning about technical analysis, and long story short, I blew a lot of money really, really fast. So the exact opposite of what I was told. Don't get me wrong, I was a demo account king. On a demo account, I could not lose to save my life on a demo account. But every time I went live, I don't know what changed, but I would blow a massive amount of money.
Your psychology. Money.
Yep. That's what it was. Okay. As soon as it was real, it changed.
Yeah. I tell people demos are kind of like in the old days, it was paper trading, and I would say, well, okay, what's the worst thing that could happen to you when you're paper trading? And they go, what? I say, you get a paper cut. So, I always advise people that there's a medium step to take between demo and live, and that's micro. Because, you can't get buried, and you have money on the line. So it's kind of like a nice baby step before you really leverage yourself.
I agree 100%. I forgot what book I read this in. There's so many books out there, but I remember reading one trading book, and it was like, you should be trading so small, especially at first. You should be trading so small that no loss makes you upset and no win makes you happy. Meaning, if you lose, like you said, you lose some money in a micro account, you lost a little bit. It's not going to sink your account. You win some money, it's not going to change your life. And
right.
I agree. That's a great way to get started.
Yeah. All right. So thanks for that, Akil. We're looking at the euro, and it kind of ties in with the fact that I know that you were with Jason Stapleton, Trade Empowered, for many years, and I went to your new YouTube page. What's interesting to me is here you were learning about harmonic work for all these years, and I don't see a harmonic pattern here. Doesn't look like you're using harmonics, bro. I mean, that your charts look like mine. So, well, I mean, and you've seen people try and use harmonics for a long time. Am I reading anything into it or it's just your personality, more, what do we call the kind of conventional technical analysis works better for you because it's simpler?
Well, I'll tell you what, it's a little bit of both. They're actually, I've got two harmonic patterns here. I don't have them drawn on, but they're hidden. I'm actually involved in one right now.
Okay.
And I'll draw one. One is going to be, there's a bat pattern right here.
Okay.
That I just got involved in after. I give about 15 minutes after the non-farms release, just to, it bounces one way, it moves another way, just to get all the junk out the way and end up doing what it normally did. There's a bat pattern right here that I'm involved in now. And if we would have seen, we saw an initial dollar weakness to begin with. If we would have broken through this level, we actually would have had a cipher formation as well. So in this case, I actually do have two harmonic patterns that I'm looking at, but in general, you're 100% right. I still use harmonics. I still use pattern formations as a part of my everyday trading. However, I've kind of taken a step backwards in my trading, and I'll tell you why. When I first started trading, and I believe this with traders, when you first start trading, you want to have it's easier for a trader to find success if they have a rules-based strategy. I believe 100% in rules-based strategies. I teach something called the if-then thought process, where basically you go through your mental checklist as if you were a robot. If this, then that. If this, then that. Yeah, and advanced pattern formations for me, again, I struggled for so long in trading, mainly because of psychology. So when I first really got involved in trading, I needed something extremely strict. So very little gray area, something black and white. If the market does this, then I look for that. If the market does this, then I look for that. And that was the only thing that really kept me on track with my trading. It didn't allow my mind to wander. It didn't allow me to, there's so much subjectivity, there's so much discretion in the market, and I wanted to avoid that as a newer trader. Now, as I got involved in the market, and I always believe that after you learn to trade, and I'd love to hear your opinion on this as well, Dale, but after you learn to trade, I think there's like another 2-year learning period. It's kind of similar to learning how to drive a car. You can learn how to drive a car, you can take your driver's test and get your license and technically be allowed on the road. But we both know that when you're actually on the road and in real life with the other crazies out there, it's a little bit different than just learning in an empty parking lot.
Yeah, that's a great metaphor. Yeah, I think you're right. I always ask people, once they become, they can make a living off the market, it's not a hobby or a second job or whatever application. Most people say about at least 4 years to make breakthroughs to where they feel that they've been able to have that epiphany, and that probably includes knowing how to trade. That happens in the first couple years, and then learning to master your emotions and be disciplined out there when the heat is on.
Yeah, I agree. I remember Mark Douglas, I think it was Mark Douglas.
In the zone.
who talked about the 4 stages of trading, and the first, I always get these messed up, but the first is called unconscious incompetence, where you come into the market and you're like a baby. You don't know any better. Babies don't know what is good, what's bad. They don't know if they touch the hot stove, it's going to burn them. Same thing like with us in the market. We come in, it's like, ooh, shiny red thing, shiny green thing, let's just play around. And then eventually we learn valuable lessons from our mistakes, and we go into the stage which is conscious incompetence, where we kind of realize that maybe we don't know as much as we thought we knew. We kind of have more of a respect for the market, that, hey, I actually have to have a strategy, a technique, a process for trading this. And then traders move into the 3rd stage, which is going to be, I think it's conscious incompetence, where I think this is where many traders get stuck, where they have an idea on what they need to do, what they're supposed to do. But like you mentioned earlier, those psychological battles, the greed, the fear, the need to trade, the fear of missing out, all of that kind of stands in the way from us doing what we're supposed to do. And then finally, after, like you said, that 2 to 5 year period where you've been in the market, you've kind of mastered your style of trading, you finally reach a level, or you hope to reach a level, which is called unconscious competence, where you're basically running on autopilot, where it's like, hey, you know exactly what you're looking for, you know exactly how to take it, you know where entry, stops, targets goes. You're kind of just, it's like us driving now, where we no longer think about pushing the gas or putting the turn signal on. We just kind of do it automatically. And I think that's the part that all traders, that's the level that all traders strive to get to, I think, or at least they should.
Yeah, they do. And even once you're there, because let's face it, just like doctors, lawyers, doctors have great days in surgery. There's malpractice, even though they've been doing it for 20 years, because they had an off day, they didn't get enough sleep. I really advise people that if their life is in flux, or physically they're not feeling well and they're not sleeping, that they shouldn't trade. That, really you have to be in at least mentally a peak performing state to trade. Yes. And if you're sick, you're not in your peak performing state. So it's okay to not be in the market. And, that's something else that takes a long time to learn, that it's okay to be out.
Yeah, I couldn't agree more.
And especially if you're under duress in any way. You don't need to add to it. So that's just, another philosophy I have. So let's get back to this Euro, bro. I'm interested because I think there's still another charge left to the upside in Euro. And I've been looking at this. I guess the question is, after last year, Akil, and I'm going to ask you to get a little bit Nostra Stokes here with me a little bit, because we're coming to the end of the year. And so just like at the end of the week, you update your weeklies, and end of the month, your monthlies. At the end of the year, I start thinking ahead as to, what happened this year, and well, should I be looking for a continuation, or what's my bias going into 2018? So I see some patterns here on the Euro that could play out, but they all look constructive to me. Am I reading it correctly?
Yeah, I'm really in a neutral phase here, and real quick, just to follow up on the conversation we had last, I've kind of gone back to the classics. The more time I trade, the simpler my trading gets. So I've really enjoyed going back to the classics of breaking down a price chart with simple classic charting formations. I'll show you one that's on here, but even stuff like looking at individual candles and creating a story for each candle. And I've really fallen in love with going back to that bare bones type of analysis versus the harmonic patterns. Again, I still use them, but I'm going back to just simple pullback trades.
In the Forrest Gump way of looking at markets. Keep it simple, stupid, right?
Exactly. I'm in love with that. But the Euro, it's you know what? I'm in a neutral phase here on the Euro. I'll show you what I was thinking, basically from this was the end of the summer, and recently that idea has been just poo-pooed away. But we had seen Euro's an interesting area because we've broken previous structure resistance, right? We were in consolidation in this little junky area for the better part of 2 years. We finally broke out of that, and we rallied right up to, you can see, previous structure support, which is now acting as resistance. So we were really in an area where I was looking for the market to tell me what is the next move. And I kind of use a 4-point process in my trading called IPDE, where identify, predict, decide, execute. I identify what the market is doing, what the market has done. That allows me to make a prediction on what I think the market is going to do next and how the market is likely going to do it. Once I have that prediction, then I go down and decide how I want to get involved and then eventually execute the trade. But we had come up past this previous level of resistance, and you can see this is my RSI indicator down here, guys, the relative strength index.
No, I renamed it.
Uh-oh.
To the real simple implicator.
There we go. The real simple implicator.
Because of what it implies. All right, go ahead.
Oh,
I'm thinking, the way I look at it, you see that RSI reading at the end of the rally over, back in July in the summer when we were making highs this year.
Oh, this year. I'm sorry. Yeah, right here.
Up there. See the reading in the 80s? There you go. Markets rarely peak with that kind of momentum. That's my thesis. Normally if you're going to get a big break, and most reversals happen with a few divergences under 70, but that keeps me constructive, that RSI reading.
Yeah.
Does it mean anything to you since you use it, RSI?
I use the RSI to complement. So and I think it should be the case for every indicator because indicators in general are lagging. So I'm like you, I look at price first, and then I look at the RSI to see, hey, is there any divergence? Do you have a bullish divergence, a bearish divergence, hidden divergence, any of that stuff? Okay. And when we came up here, I was actually looking for some type of relief. I thought we'd see, we had a head and shoulders pattern form. And I'll draw it out for you real quick. And this is going to be a move I got skunked on. So for you guys that don't know.
The false breakdown?
Yep. For you guys that are new to me, I'm not just a trader that shows you the good. I'm like Dale, I showed you reality. But we had a head and shoulders right up here, a little triple head action right here. And this is a classic reversal pattern. And what I was waiting for was a break and close below this neckline. You can see that price action gave it to us. And I was looking for a simple pullback trade. I was waiting for the pullback to this area, an opportunity to get short in the market, stops right above our right shoulder here, and look for an opportunity to at least come down and retest our previous structure lows here. You can see a pretty decent risk reward. Unfortunately, you can also see that the market kind of, it got me, which happens. It did take me out of the trade, and well, the higher high, higher close above this shoulder just puts me back in that neutral territory where I see nothing on the chart right now that says we're going to continue higher. Obviously, we can come and test our this consolidation level up here, but I see nothing on the chart.
Now that I look at it, I see nothing in the chart. Period. It's just a range.
Exactly, right? And that's what has me looking for advanced pattern formations. Typically, when the market is in consolidation, when it's doing that sloppy, disgusting, chopping movement where it's like, ooh, bearish trend, oh no, bullish trend, oh no, bearish trend. That's where you see advanced pattern formations form. And we actually just missed out on one here. This was close. But it was a pattern formation a harmonic pattern, another cipher formation that was right up here at about 119.76s and just missed before rolling over. So that was unfortunate. Yeah, but I don't know. I don't know what to look for.
You know what? How long did it take you to learn to say I don't know?
I used to be so embarrassed to admit that, especially as a trader, but as an educator, you have all these people looking at you. It's like, well, you're supposed to be the genius. How can you say I don't know? But like you said, that's the truth.
People choke on that, but It's wisdom to say I don't know instead of, you know, your ego taking over and trying to come up with something to make yourself look stupid. So yeah, I don't know is a legitimate answer for me. So
and I'll tell you what, real quick. And what's important is that it's okay not to know what the market is doing at the moment, because sometimes we're just not going to get a clear signal like this. What's important to know is what you're going to do when the market makes its next move. So we can tell ourselves as traders, right? I like to say we want to be predictive in our analysis, reactive in our execution. Where, okay, well, I don't know what the market's doing right now, but if we come up to this level, then I know how I'm going to take advantage of it. Or if we come down and break these lows, then I know. So although there's nothing happening right now, we're already mentally preparing ourselves for the next move and going through that process. If we do this, then I'm going to attack it this way. And that's what's important as a trader, being 1, 2, 3 steps ahead of the market as far as analysis goes.
You have any high conviction outlooks for 2018?
Not sure. I mean, we've got a new Fed chair coming in. I think obviously we have the rate hike in, what's that, next week already, right?
Yeah, this month.
Yeah, we have the rate hike coming out, I think December 13th, and obviously that's been priced into the market. So I don't expect, aside from, you know, God forbid, a few traders that get suckered into it. I definitely wouldn't try to, you know, when we hike rates here in the U.S., I wouldn't try to jump on that move and assume it's a positive. That's already been priced in. What the market's going to be looking for is, are we still going to have 3 rate hikes in 2018? So they're going to look at the statement and see if there's a dovish tone, a hawkish tone. But I think it's going to be a little bit hard to read, because again, Yellen's her term ends in January. We have a new voice coming in. I think the market's going to wait to see how this guy feels and what his statements are before kind of making any type of decision about, hey, should we be bullish or bearish the dollar, you know, based on potential rate hikes.
I think that's the long answer for I don't know.
There we go. That's the teacher answer, where we make ourselves see.
Anyway, hey, look, bro, I want you to have a chance to show and tell us about your new business model. If you want to go to your, I don't know if you have a website now, or I saw your YouTube page. So why don't you spend a few minutes talking about what you're doing now? And show
well, not a lot that I can announce right now, okay. But I've been working with Trade Empowered for 6 years. That's the company that trained me and gave me an opportunity to give back and become a teacher. Right. And this is going to be the final year that I'm working with them. So I'm still teaching until the end of 2017. Obviously, we never want to leave our clients high and dry, but I will still continue to coach in 2018. I've got some really big plans. Again, you'll hear about them when the time is right. But
I mean, you know, thousands of views on a lot of
Thank you.
videos. That's you're also a great marketeer.
Thank you. I try to be I'm like you. The best thing we can do is just be honest and not try to paint a picture that isn't true.
Yeah, sets you apart. Yeah, so what do you say to people when they come to you and say, Akil, I have 10K, can I trade for a living? What do you tell them?
I typically give them the hard, honest truth, where I say, no, not by trading 10K. Obviously, it depends on your lifestyle. There's a big difference between someone living in New York City and with a mortgage and 3 kids in private school versus someone that's living at home with their mom and not paying rent. But typically, I say it's not realistic. If you just do the math on what a realistic return is, 10K isn't going to be enough to provide for your lifestyle while continuing to grow your account, unless you're supplementing your income with a business, meaning you're trading your 10K account. But let's say you've gotten to the point where you're really, really good. You've also started a signal service, so now you're bringing in supplemental income from managing money or sharing trading signals or teaching. So in that aspect of
great advice, have more than one revenue stream.
Always, and we always get a bad rap as teachers. We say, hey, you guys just teach because you can't trade, and it's like, no, it's business. We enjoy teaching, we enjoy trading, But when is not having multiple revenue sources a negative? And especially in trading, we go through drawdowns, right? I went through this year, right? All right, so it was around this time this year or last year where it was December. I'm doing my trading review. I'm adding new things. I'm getting all excited about 2018, right? I guess it was 2017 at the time. And you know how it is, a brand new year, fresh start. This is going to be awesome, best year ever. And I started off, right? I started off 2017 with a 17% drawdown, Dale. I got punched right in the face on day one, and it continued for 6 weeks. And now I've been through enough drawdowns that I know I will trade my way out of them. I know that I'll get my head above water and make profit. But for someone who is trading for a living, when you're taking all of your trading income and you need that to provide for your lifestyle, when you don't make money for 6 weeks, where is that money going to come from?
Yeah.
And what type of stress is that going to put on you when you know that, hey, if I don't make profit on this trade, I may not be able to pay my rent? That's tough. Having supplemental income.
Yeah, I have a great title for this interview. What happens when two old pros get together and get real about the business? So, it's been great. It's been great talking to you, Akil.
Thank you.
Wherever you go, my hope is that pips rain down on you, Akil.
Thank you.
I'm a fan. I root for you, and that 2018 is your best year ever, and not just in financially and pips, but in all ways. So it was great talking to you, my trading warrior brother, Akil Snow.
Thank you. One last thing I just want to say, I appreciate everything you do, Dale. I have a massive amount of respect for the real educators and coaches out there, meaning that people that genuinely just want to help people are in the trenches every day like you are, just working with traders, because that's the type of support that makes people better. It's not a magic system. It's not a magic book. It's people like Dale that come in here and every day just try to give you hints and help you make those small little jumps each day. So I appreciate everything you do. I know the group of traders that follow me, they love you. And just you've always been an inspiration to me, and
wow,
I really appreciate that, man.
What a great way to end the week. I do have ADD, attention deficit disorder. I never get enough attention. So thank you very much. Thank you, Akil. That was, I'm humbled by it, and it's really nice to know. And Merry Christmas to you and yours, and Happy New Year.
Thank you. Same to you.
Let's keep in touch, and if I could help you in any way, once you launch, let me know. I'll get some tweets out there for you. Okay, buddy?
I appreciate it, guys, and thank you guys for listening to me.
All right, Akil. Akil Stokes, everybody. And that's a wrap for Face today, guys. And this euro pound looks like it's closing okay. Just something, something I wanted to show you guys before we go. No, not status. Okay, there we go. So, but it's still lower on the week, I believe. But anyway, this was a classic stop hunt, got all the longs out, held 61.8. There'll be opportunities next week. You're going to see me tomorrow. That's right, Eric. All right, for all who celebrated, happy Hanukkah. And may the light of the menorah light up your life, and really looking forward to working with everyone in 2018. And I'll wrap it with, it's gonna be a blue, blue, blue Christmas without you. I'll be so blue just thinking about you. It's cheap, Isaac. So that's it. Remember, don't just count your pips, count your blessings. Have a great weekend, everybody. Set up your Christmas tree. I think Steve or Stelios did it about a month ago. All right, you're very welcome, Isaac. Umed, nice to meet you. See everyone Monday. Enjoy your weekend. Sign up to ForexAnalytix. Get ready for 2018. Adios. Thank you, Akil.